Florida's housing market was supposed to be unstoppable. Prices doubled. New residents poured in. Even the governor bragged about paradise on the rise. But when Hurricane Aaron's monstrous winds threatened to flatten the coast, deals collapsed overnight and buyers vanished. Governor DeSantis was left scrambling as insurance failures mounted and market panic spread. Experts now warn a single crisis could trigger financial disaster for hundreds of thousands of Floridians. If the governor of Florida loses it after buyers walk away from home, sales sounds dramatic. Consider this. Why are smart investors abandoning the Sunshine State just as everyone else is rushing in? The real fault lines beneath this boom start to crack right now. Sun, palm trees, and a line of moving vans stretching across the 95. In 2021, South Florida became the finish line for America's Great Migration. By the end of that year, nearly 330,000 new residents had swapped snow for sand, pushing the state's population past 22 million. Miami-Dade and Palm Beach counties saw their fastest growth in a generation, with Broward close behind. The median home price in key zip codes doubled in just 30 months, turning modest bungalows into million-dollar listings. In Boca Raton, a three-bedroom that sold for $480,000 in 2019 closed at $975,000 by spring 2022. Realtors fielded offers sight unseen, sometimes from buyers who'd never set foot in Florida. Sellers set deadlines. Buyers waived inspections, and bidding wars became the new normal. From Coral Gables to Jupiter Island, Governor Ron DeSantis, never one to miss a headline, called it paradise on the rise. He pointed to the numbers: record job growth, record home values, record net migration, as proof that Florida was the new promised land. Press events featured ribbon cutings at luxury towers and groundbreakings for sprawling subdivisions. National outlets ran stories on Wall Street firms buying up entire neighborhoods, flipping rentals into gold. The governor's message was simple. Florida's boom wasn't just luck, it was leadership. Tax breaks, open schools, and a business-friendly pitch had lured families and investors by the thousands. If you wanted a slice of the American dream, this was the place to chase it. But beneath the glossy listings, the cracks were starting to show. In West Palm Beach, the average home price hit a record $540,000, but so did the average monthly payment. Locals watched as insurance quotes crept higher with every renewal, and closing costs ballooned past what most newcomers expected. For every story of a cash buyer landing a waterfront condo, another family was priced out of their own neighborhood. Yet, the headlines stayed bright. DeSantis doubled down, promising that the boom was built to last, and that Florida's growth would outpace the rest of the country for years to come. The surface shimmered, even as the fine print on every closing document hinted at costs no one wanted to discuss. For now, paradise still sold itself, but the bill was coming due. 6 insurance carriers failed in Florida since 2022, leaving hundreds of thousands scrambling for coverage as hurricane season began. The average homeowner's policy now costs $6,291 in Broward and $6,170 in Miami-Dade, more than twice the national average. For most, insurance isn't just a line on the closing statement anymore. It's the wild card that can break a deal or break a budget. The private market's retreat forced a mass migration to Citizens Property Insurance Corporation, the state-run backstop designed for emergencies, not everyday business. By the summer of 2025, Citizens covered over 1.3 million homes, nearly 1 in 8 across the state. That means every Florida policy holder, even those with private coverage, is now exposed to the same pool of risk. If a major storm triggers huge losses, Citizens can levy search charges on all insurance customers, not just its own. The safety net has become a shared burden, stretching thinner with every new policy. Premiums have exploded as private carriers pulled out or went insolvent. In 2021, the median annual cost for a standard policy in South Florida hovered around $3,200. By late 2024, it had doubled. The average single-family homeowner in Broward now pays more for insurance than for property taxes. Condo associations, hit with blanket rate hikes and stricter underwriting, pass costs directly to residents. For some, that means special assessments topping $10,000 just to keep the lights on and the roof insured. Litigation only adds fuel to the fire. Florida accounts for nearly 80% of all homeowners' insurance lawsuits in the country, despite having just 9% of its claims. Insurers point to legal fees and fraud as reasons for their exit. But for families trying to renew a policy, the result is the same. Fewer options, higher bills, and a growing sense of vulnerability. Citizens was never meant to carry this much weight. Its reserves, while strong on paper, are dwarfed by the potential losses from a major storm. Every new policy shifts more risk onto the collective, raising the specter of emergency assessments that could hit every homeowner in the state. For buyers, the true price of a Florida home now comes with a second mortgage paid out to insurers with no ceiling in sight. Mortgage math has turned brutal across South Florida. A 30-year fixed loan on a median-priced home now runs more than $2,100 a month, double what buyers faced 3 years ago. That extra $1,100 isn't a rounding error. It's the difference between qualifying for a starter home and getting locked out entirely. Sellers who bought at the 2022 peak must choose cut the price, offer cash at closing, or watch equity vanish. Nearly 41,000 homes now sit unsold in the Tri-County region, up 61% from last year. Pending sales have slipped 11% in the first quarter of 2025, and the average time on market hovers near 60 days. For every new listing, fewer buyers show up, and those who do demand concessions, rate buy-owns, prepaid insurance, even roof repairs. The math is unforgiving. Mortgage rates above 7%, payments that swallow half a paycheck, and a glut of homes no one can comfortably insure. The market's fragility shows up in the numbers. In Fort Lauderdale, 21.3% of pending deals fell through in July, the highest cancellation rate in the country. Miami and Tampa aren't far behind. Inventory has jumped more than 50% in a single year, flooding the market with options, but draining sellers' leverage. For residents like Carla Rodriguez in Hollywood, the official calm offers little comfort. She watched the governor's press conference from her living room. Sandbags stacked by the door, insurance documents on the table. Her policy premium doubled since last year, and her phone buzzes with alerts about rising tides. The state's message is stability. But for homeowners on the ground, the line between reassurance and reality grows thinner by the hour. Every new cancellation chips away at confidence, leaving the market exposed to the next shock. Whether it comes from the sky or the spreadsheet, August 24, 1992, Hurricane Andrew made landfall in Homestead with winds topping 165 miles per hour, flattening entire neighborhoods in a matter of hours. More than 28,000 homes, mobile homes, and apartment buildings were reduced to rubble. Another 107,000 dwellings suffered major damage, leaving over 180,000 Floridians homeless. The storm's path cut a visible scar through South Dade County. Roof trusses scattered like matchsticks, streets littered with shattered windows and mangled garage doors. In Homestead's mobile home parks, 99% of the units were obliterated. Andrew's $27 billion price tag rewrote the record books, but the real costs showed up in the months that followed. Families living in tents, schools shuttered, and a housing market paralyzed by uncertainty. Before Andrew, Florida's building codes were a patchwork. Over 400 different sets of rules, each enforced at the whim of local officials. Roofs were fastened to walls with little more than nails and hope. Windows cracked under flying debris, leaving interiors exposed to wind and rain. Inspectors later found that many homes failed not from the storm itself, but from shortcuts and weak enforcement. The aftermath made one thing clear: the old system was broken. The fix began in 1994 with the South Florida Building Code a first step toward tougher standards. Roofs now required hurricane straps and metal ties, anchoring every truss to the walls below. New homes had to include impact-resistant windows or shutters tested to withstand windborne debris hurled at hurricane speeds. But the real overhaul came in 2002 when Florida adopted a single statewide code, the Florida Building Code, replacing 400 local versions with one set of rules for every builder from Key West to the Panhandle. In the high-velocity hurricane zone, covering Miami-Dade, Broward, and the Keys, requirements reached their strictest. Homes there must withstand winds up to 200 miles per hour. Garage doors, roof coverings, and even the smallest wall connections are engineered and inspected to survive the worst-case scenario. Every window and exterior door must resist high-speed impacts or be shielded by certified shutters. These measures aren't just theory. In the years since, post-storm surveys show homes built to the 2002 code suffer 87% less wind damage than their pre-Andrew counterparts. Andrew's legacy isn't just stronger homes, but a new way of thinking about risk. Buyers today look for impact glass, reinforced roofs, and elevation certificates as closely as they check the view. The memory of 1992 lingers in every closing document, every insurance appraisal, and every hurricane forecast. For the governor, the lesson is clear. When the next storm threatens, the difference between disaster and recovery is measured in bolts, beams, and the codes that hold them together. Ocean temperatures off the Florida coast ran 2 degrees above normal in late August, fueling a storm that would haunt every open house and closing table from Miami to Vero Beach. Aaron's core spun up to 160 miles per hour, its wind field stretching 575 meters wider than the state itself. No landfall, but the threat was everywhere. Evacuation maps filled local news, and the National Hurricane Center's cone grazed Palm Beach before veering east. For days, the shadow of Category 5 hovered just offshore, and every weather alert landed like a punch to the gut. For buyers and sellers alike, the market seized up overnight. Showings canceled, contracts stalled, and lenders froze funding for properties anywhere near the coast. Insurance companies locked down new policies, leaving buyers in limbo as the storm's outer bands whipped up surf and sent tides spilling over seawalls from Jupiter to Hollywood. For agents, it was déjà vu. Phones ringing with frantic questions, deals hanging by a thread, and sellers suddenly desperate for certainty that no one could offer. In Fort Lauderdale, 21% of pending sales fell apart that week. Miami and Tampa watched their cancellation rates climb. As buyers decided to wait out the storm or walk away entirely, Aaron didn't have to make landfall to break the spell. The memory of Andrew lingered. But this time, the fear wasn't just about shattered roofs or flooded streets. It was the realization that one storm, just close enough, just strong enough, could freeze the entire market with a single advisory. Every uptick in wind speed was another reason to hesitate. Another reason to back out before the deposit became non-refundable. For families who had just scraped together enough for a down payment, the risk felt impossible to ignore. By the time Aaron turned north, the damage was psychological, not physical. The storm left behind a trail of empty listings, anxious sellers, and a governor whose steady assurances now sounded brittle. Paradise, it turned out, could be paralyzed by a forecast alone. In South Florida, the rules of the market had changed. Confidence could vanish faster than the clouds could clear. Governor Ron DeSantis paced the briefing room, sleeves rolled and jaw set as the numbers rolled in from Miami-Dade. More than 1 in 5 pending sales had collapsed in a single week, and the phones at the Capitol rang with calls from anxious mayors, builders, and homeowners. Reporters pressed for answers, but DeSantis was already on offense. At a hastily called press conference, he didn't mince words. "We're not going to let a correction gut the Florida dream. If the system is broken, we're going to fix it." He pulled out a draft of what insiders were already calling the tax kill bill, a proposal to eliminate property taxes for homesteaded owners statewide. The plan, outlined in a memo dated March 31, 2025, called for $1,000 rebate checks to every homeowner and a ballot push for a constitutional amendment that would wipe out the levy altogether. People shouldn't have to pay rent to the government, he declared, especially when their home values are tanking and their insurance bills are through the roof. His move stunned the legislature. House Speaker Daniel Perez called it a fake refund for local property taxes, accusing the governor of chasing headlines instead of solutions. But DeSantis doubled down, vetoing $1 million for a property tax study and dismissing the House committee as a total dog and pony show. The governor's urgency was palpable. With Hurricane Erin still fresh in memory and buyers walking away in droves, the old assurances no longer held. DeSantis gambled that radical tax relief could steady the ship, or at least buy time before the next storm, political or meteorological, hit Florida's battered housing market. Blackstone, the world's largest alternative asset manager, didn't wait for the next hurricane season. In the spring of 2025, their Home Partners of America subsidiary began quietly unloading homes across South Florida. Single-family rentals, condos, even the pastel townhouses that once symbolized pandemic-era optimism. Listings surfaced in St. Petersburg, Palmetto, Miami Beach, and Sunny Isles, each marked by the same telltale sign, a price cut. Some properties bought for $490,000 in 2022 sold for $360,000, a 27% loss. Others lingered for months, finally moving at discounts no local agent had seen since the Great Recession. This wasn't a one-off. Blackstone's industrial sell-off topped $1 billion in 6 months, including warehouse portfolios in Broward and Opaka. The numbers told a story: 28,000 homes nationwide, $80,000 shaved off single-family listings, and a portfolio-wide retreat that outpaced any routine portfolio rotation. For every house sold, another hit the market at a lower price. The firm's rent-to-own program, once a darling of Wall Street earnings calls, vanished from Florida's landscape almost overnight. The verdict from institutional capital was unmistakable. Insurance costs, property taxes, and softening rents had broken the math. Blackstone's exit sent ripples through local MLS feeds and national investor forums. In Miami-Dade, buyers from New York and Chicago saw the discounts and hesitated. If the smartest money was bailing, what did they know about the next storm or the next round of insurance hikes? Meanwhile, agents in Atlanta and Charlotte fielded calls from families who once dreamed of Boca Raton but now hunted for stability elsewhere. The message was clear. Florida's market wasn't just cooling. It was being actively drained by those who once called it a sure thing. In 2022, Florida set a record for net migration, and home values in parts of Miami-Dade doubled in just 2 years. But beneath that surge, 14 insurance companies failed, forcing more than 847,000 policies onto Citizens Property Insurance and pushing average premiums in Broward County above $6,000. When Hurricane Erin's 160-mile-per-hour winds threatened, buyer cancellations in Fort Lauderdale jumped to 21.3%, and Miami-Dade listings climbed by 50%. Governor DeSantis responded with an unprecedented proposal to eliminate property taxes, calling it a necessary correction. Yet, investor giants like Blackstone began liquidating Florida holdings at up to 27% discounts, and net migration fell to record lows. Many documents on state emergency planning and insurer solvency remain undisclosed, leaving open questions about the true stability of Florida's housing market. What is clear from the evidence, rapid growth can hide deep vulnerabilities. For anyone considering Florida real estate, the public record shows that long-term resilience now depends on more than sunshine and rising.